Thank you so much for joining us here on a Monday morning. I'm Marlon Bowling with you, your tour guide to the ag commodities. I'm joined by Brian Hoops of Midwest Market Solutions. He is based in Springfield, Missouri. And Brian, as we get things rolling here on a Monday morning, hey, we had some overnight export sales business to talk about. We had a sale of corn and we had a sale of soybeans. Sold a little corn to unknown destinations. It was 150,000 metric tons. Soybeans, 132,000 tons, specifically to China. But they kind of needed a little boost because we had some weakness overnight. Let's look at where we finished up on the Globex trade. On the weekend here, we had the corn market finishing 5.5 lower this morning at 610 3/4 on that March contract. New crop December was down 4 cents at 561 1/4. On our quotes provided by bar chart here, we have soybeans on the March down 12 1/4 this morning at 14.02. Wow, within a penny of its low of the overnight trade, off of its overnight high by 21 cents. And let's take a look at the new crop November contract as well here in the soybeans. Overnight, we had them finishing 10 3/4 lower at 13.05 1/2. Well, let's go out to the wheat. And in Chicago wheat, March was 2.5 higher at 782 1/2 per bushel. In the Kansas City market, we had some plus signs. March up 6 at 799 1/4. Actually got as high as 808 3/4 overnight and then backed off a little bit. So just under that $8 benchmark. And in Minneapolis wheat this morning, March up a couple of pennies at 938. So all kinds of dynamic market action going on here in the overnight trade on Sunday evening. What do you think is behind that here, Brian?
Yeah, good morning, Marlon. A lot of volatility from where we went to bed to where we woke up. Stock market has really reversed course as well. It was higher for a while overnight, and now we're entering this correction territory. Corrections in the markets usually about 10% is kind of the baseline, and we've hit that now in the Dow and the S&Ps finally on this significant pullback. But some rains developed overnight in parts of South America and over the weekend. Some light rains are in forecast mode again this week, and then it gets a little bit wetter in the 11 to 15 day. Now, it's been noted as we go out farther into February, there's a good chance we're going to return to La Nina type events with hotter and drier conditions once again. And so that could be kind of a catalyst for this market here. We may see some weakness in the near term with the stock market being down, but it's probably not going to last if these forecasts that we're talking about into February, March do come true and we return to hotter, drier conditions.
So the Dow down 397, but the U.S. dollar index is basically 400 points higher this morning. How much could that contribute to the ag trade today?
Yeah, it definitely is pulling the wheat market off of its highs. The wheat was the upside leader overnight. Political tensions are rising between Russia and the Ukraine, and that would bode well for wheat. It would also bode well for corn exports, but we really backed off of our overnight highs, and a lot of that has to do with the U.S. dollar surging and turning higher in here. The question will be, can we sustain the strength of the dollar? Recently we've entered a downtrend for that U.S. dollar index, and that should be bearish for the dollar and should be bullish for commodities longer term.
Also, the crude oil market, let's take a look at that. For West Texas Intermediate crude, it backed up a little bit overnight. March down $1.56 at last check at 83.58 per barrel. Some wondered if it was going to be running out of gas. Man, that was a bad pun. But anyway, as it moves closer to $90, maybe it flamed out a little bit here right now. Oh, let's take a break right here, Brian, and we'll come back and we'll talk livestock on the other side. We're back with Brian Hoops of Midwest Market Solutions. Okay, Brian, as we headed into the weekend, we had that cattle on feed report that came out after the markets closed on Friday. There's a lot of anticipation of that report. A lot of folks didn't think it would maybe be a major report, but I guess you be the judge. The on-feed number as of January 1st came out to be 101% of a year ago, or a 1% increase. Trade was looking for things to be pretty much steady, maybe slightly under a year ago, so a little high on that one. Placements, 106% of a year ago. The trade thought we would see 101.8, so that was a bit of a shock to the system. Way bigger than expected there. Marketing is 100% of a year ago. The trade was looking for about 101. Brian, your take on that, and will that shock the market here this morning?
Yeah, Marlon, I think it will, especially that placement number that stands out. I was one of the analysts that they asked for Newswire estimates, and my number was 104.7. That was the high end, and it was even above the highest end of bearish estimates here. So it's something that really I think caught the trade off guard, and it should pressure the summer contracts of June cattle, probably August. But these cattle being pulled ahead off of grass who just don't have much good grazing conditions this winter, and so they're being placed in the feedlots a little bit quicker. So, overall, it really doesn't change the number of cattle that are going to come at us. It's going to come a little bit sooner because they're being placed into the feedlots quicker. But overall, it's not really a game changer of the market. The big concern, I think, here in the immediate term is the stock market selling off once again. Concerns about the economy and the virus that are spreading, and that would limit consumer demand for beef, especially the retail level. That's something we've been talking about for seemingly months now, as our concern going through this year, rather than just bigger placement numbers. So it could be a little negative off of the opening bell here this morning, but as we go through the month of February, if we can clean up some of these numbers, increase our kill capacity, we can chew through these numbers pretty quickly.
So does that necessarily change the perspective on what could be a big report, cattle inventory report at the end of the month?
Yeah, probably not really changed that number a lot. We are in the fourth year of liquidation of our cattle inventory herds, so that's something that we expect to see coming up at the end of the month, and that to be confirmed. And if we do see that, we would expect a decent recovery into the summer for these cattle. But we have some decent prices to work with now if producers are looking at doing some hedging, but there may be some better opportunities down the road.
Well, on the live cattle, we had the April dollar lower, a little over $1 lower. March feeders were $1.65 lower on the close Friday. And lean hogs wrapped up last week with April up 95 cents at 94.95. We'll see how they start out here in a little bit. Thanks, Brian, for the help. Brian Hoops, Midwest Market Solutions. We'll get everything opened up here, Janet, at the bottom of the hour. Stand by.